Welcome back to the channel, everybody. Racky Ryan here. Today I'm going to be talking about a stock that one of my most loyal subscribers asked me to value. This guy comments on every single one of my videos. His name is Scott. He wants me to value Scotts Miracle-Gro. No pun intended, so that is what I'm going to be doing today. Keep in mind though that I am not a financial advisor. I'm just some guy on YouTube wearing a hoodie who likes to talk about stocks. So these are all just my opinions, and this is all for entertainment purposes. With that being said, let's dive on into this valuation for Scott. Okay, so as you can see here, I already ran the model, but I'm going to run it again with you guys so that you understand how I am deriving these price targets. So in order to get these financials right here, you just simply go to Morningstar. So Scotts Miracle-Gro is trading at $251 per share. You go to the key ratios tab and you click full key ratios. From there, I just literally screenshot it like that and then import it and put it right here. So that is where this data is coming from. So if you've watched my videos in the past, but if you haven't, make sure to subscribe. The most important metric in my model is the free cash flow per share. So I'm going to take year 2020 free cash flow per share. So that's 5.14. Then I go back 5 years and I get the free cash flow per share from that year, which is going to be 2.74. And this is going to give me a compound annual growth rate. If you don't know what a compound annual growth rate is, I have a video above that you can watch. So this is going to give me the growth rate that the free cash flow per share has been growing at over the past 5 years. And this is the model that Warren Buffett uses. The reason why he likes to look at free cash flow per share because it's also known as owner's earnings. This is the money that is left after paying for all expenses and reinvesting into the business for things such as capital expenditures. So you can see here that the operating cash flow was $558. They had $63 in cap spending. The free cash flow ended up being $495. So what is cap spending? Cap spending is like if you have a house and you put a new roof on it. That would be a capital expenditure. You're improving your property. So now I'm going to run 3 scenarios in order to value Scotts Miracle-Gro. So I'm going to go ahead and enter these numbers because they do not change. So the first thing that I like to do is take the compound annual growth rate from the past and then project out into the future the same compound annual growth rate. What this means is this stock going to continue to grow its free cash flow per share at the same rate? So I'm going to go ahead and go with the same compound annual growth rate. The discount rate that I'm going to use is 7.5%. This discount rate is the annualized return on the S&P 500 adjusted for inflation. The reason that you use a discount rate is because there is an opportunity cost for investing. An opportunity cost means I could invest into Scotts Miracle-Gro, or I could invest into the market, the S&P 500, into some sort of index funds, and I have these choices. So if you're going to value Scotts Miracle-Gro, you have to incorporate a discount rate or something to benchmark the stock against, because at the end of the day, you could always just go invest into index funds. And so that's part of how the discounted cash flow model works. So you have to pick a discount rate, and the discount rate that I've picked is 7.5%. Next, you need to come up with the GDP growth rate. The GDP growth rate means that you have to assume that the economy is going to continue to grow at some certain rate. On average, the GDP growth rate has been about 3%, inflation's been about 3%, so I'm just going to go ahead and use 3%. So this comes up with an intrinsic value of $174 per share under these numbers. So the current stock price for Scotts Miracle-Gro is $250 per share. So according to my model, this stock is a bit overvalued, but that could be for a variety of reasons. For example, last year during the pandemic, everyone started a garden. I started a garden. Scotts Miracle-Gro was bought a ton. People are still in between. Is that going to be a lasting fad? Is that going to continue? It is the springtime. So right now I just went and bought a bunch of Scotts Miracle-Gro because I'm growing snap peas, I'm growing jalapenos, I'm growing bell peppers, I'm growing strawberries, and I'm growing some cherry tomatoes in my backyard. And so I use Scotts Miracle-Gro to grow all of that. So that is something that Scotts Miracle-Gro is used for. It's also used to fertilize lawns, but the big picture here, I have not said it yet, is that Scotts Miracle-Gro is positioning itself into the budding cannabis industry. The cannabis industry is coming, and it's coming quickly. Recently, the state of New York just legalized cannabis to be recreationally legal. So as more and more states start to legalize cannabis, a lot of the cannabis producers use Scotts Miracle-Gro because at the end of the day, cannabis is a plant, and then they grow their cannabis with a lot of the different Scotts Miracle-Gro products. And Scotts Miracle-Gro has mentioned this in their earnings calls over the past few years, that they are positioning themselves for this booming industry that is going to be happening throughout the 2020s. So part of why Scotts Miracle-Gro is valued at $250 per share and is valued at a premium compared to its actual technical value is because people are willing to pay for a higher share price because they think that there's going to be a lot higher growth in the future than the growth that we have seen in the past. And when you take a look here at the revenues have been steadily growing, and then in 2020 it had a massive jump. I would attribute a lot of that to the pandemic, to the garden boom, but I would also attribute that to the fact that cannabis is becoming more and more legalized. Another thing that's very good to look at when you're valuing a stock, especially if you're a value investor like myself, like yourself, like anyone that's watching this channel, because we're creating a value investing community, is we like to see companies that their shares are going down, meaning the company is purchasing back their own shares. So we see here that the shares in 2011 were at 66, and now they're all the way down to 56. So they've had about a 15% decline in the amount of shares to the public. So when there's less shares, that means that there's more money per share for us as owners of the stock. And the reason why Scotts Miracle-Gro is buying back shares is because Scotts Miracle-Gro obviously thinks that their company is undervalued compared to what the market has it trading at. So they're taking their own money and buying back shares because at the end of the day, they want to do what's best for the shareholders, and we are the shareholders, so they are doing what's best for us. With all that being said, now let's use a future growth rate that's higher because like I said, I am bullish, and I do think that Scotts Miracle-Gro is going to do well in the future as more and more states legalize cannabis. So I'm going to go with a future growth rate of 17.5%, same discount rate that does not change, 3% GDP. So now the intrinsic value according to my model is $207 per share, currently trading at $250. So it still is a bit overvalued compared to its intrinsic value based on these assumptions. If you own Scotts Miracle-Gro, I'm not saying that you should sell the stock. I'm just saying that perhaps it's not the best time to purchase from a value standpoint. If you already own it, that's great. But if you are thinking about purchasing it, maybe hold off, see if there's some sort of comeback, maybe see if it dips some, and then get in. Or if you just want to get in and you don't care about valuation, you can dollar cost average into it, meaning you can buy a fixed amount. You can put in $500 today, you can put in $500 next month, you can put in $500 the month after that, and that way you're buying into the stock over a period of time. So if it does dip, you buy it, or if the stock just continues to go up, then you didn't miss out because you started a position and you continually are buying. Because at the end of the day, time in the market is more important than timing the market. You get dividends, and it's very hard to predict when something's going to crash. It's very hard to predict when something's going to go up. So it helps you sleep at night, one, but second of all, it starts a position and then you're buying. If it goes down, you buy at a trough. If it goes up, you're buying higher, and it starts to even out, and it's called dollar cost averaging for that reason. So now I'm going to go with an extremely bullish case here on the future growth rate. And this future growth rate is for the free cash flow per share. It's not for the future growth rate of revenue. It is for the future growth rate of the free cash flow per share. And so if we see that the shares are going down and the revenue is going up, I mean, this was a 33% revenue increase. So if we see these numbers continue, then you're going to have to assume that as revenue booms and as they're buying back more and more shares, the free cash flow per share is going to increase a lot more. So I'm going to go with a 25% future growth rate. I understand that that is a bit bullish, but again, when you take a look at these shares going down, you see that the revenue literally jumped 33%. It went from $3 billion to $4 billion. That's a big jump, especially for a company that's pretty mature. So then you get the 7.5% discount rate, the 3% GDP. This, my friends, gives you a $278 per share intrinsic value, currently trading at $250 per share. That means there would be 11% upside according to my model. This shows why people are so bullish on Scotts Miracle-Gro. For me, it's hard to say whether it's undervalued or overvalued. It really depends on your perspective of what you think is going to happen with the cannabis industry, the gardening industry, and Scotts Miracle-Gro in general. So this is not a video where I think my opinion is you should buy the stock, nor do I think you should sell the stock. I think that it is really up to you. I know that's maybe not the answer that you're looking for, but at the end of the day, this seems like a good stock for the long run, and I can see why it is trading at $250 per share. So make sure to leave a comment below on your thoughts on my analysis, what you think of the company. I really want to hear them. If you enjoyed this video today, make sure to smash that like button and also consider subscribing. That would be nice. You can turn on those notifications if you want. I would love to see you guys again. I appreciate you guys being here, and I look forward to seeing you in the future.